guys, welcome back to our channel. Today we pick up one financial topic, what is Help to Buy and Help to Buy scheme, how you could apply for it, how you can benefit from it, and what is our thought about it.
Hello for me as well. We just wanted to clarify that before we start. This is not a financial advice. We're not professionals. We're doing this purely for educational purposes.
Okay, without further ado, let's dive into it. So what is Help to Buy? Basically, Help to Buy is a government scheme that government give you 20 to 40% equity loan for first-time buyer only and for the new build home only. So there are a few more points that I would like to point it out. First of all, you have to be first-time buyer. Second of all, it only can be used for your main residence property, cannot be used for your second home or buy-to-let property. And third of all, there are different house price cap, depends on where you live, and then you can, for example, in London, you can buy up to £600,000 property, and a different area have different price cap. We're gonna share one PowerPoint, and then if you want to have some further have a look, you can download it. Our PowerPoint, we're gonna put it in the link in our description.
Okay. There is a different guidance on how to apply for equity loan if you're living in Wales or in Scotland. So we're gonna leave these links in the description in our PowerPoint where you can read more about this if you're interested for applying from those two areas. As well, the application is going to close at 6 p.m. on 31st of October 2022. Okay, so how equity loan works. So you need to have at least 5% of the sale price of the new build property as a deposit. Then the equity loans, which is backed up by the government, lends you 20% of the value of the property, or up to 40% if you live in London. Then the remaining 75% you need to obtain from independent lender, or if you're buying in London, that's gonna be then 55%. Yeah, the equity loan, it's also interest free for the first 5 years. On the 6 years, the interest starts kicking in, which starts with 1.75%, and the following years it's increased with CPI, the Consumer Price Index, plus 2%. So what is the Consumer Price Index? This is a way for measuring inflation.
So one thing that we want to make it clear is that this 20% or 40% from the government is equity loan, which means it's different like the mortgage you had. For example, mortgage is a fixed amount, but this is the equity loan, so which means it could go up and down in value. It depends in the future, the house market goes up and down. Your equity loan also could go up and down.
But it's always gonna stay the same percentage. So if you borrow 20%, you're gonna repay 20% at the time of repayment, 20% of the home value.
So we have one example. I'll show you how the Help to Buy equity loan works.
If the price of the property you're purchasing is 200,000, then you're gonna need 10,000 for deposit, which is 5% of the purchase price. Then the government gonna lend you 20%, which is £40,000, and the rest of the 75%, which equals to £150,000, you're gonna have to borrow from independent mortgage lender.
Okay. So now we talk about interesting part. How much interest rate is your interest-free loan? So first 5 years, of course, 5 years is interest-free. So it's free money. You don't have to pay any interest. You don't have to pay back the first 5 years. It's free money. It's good. Everyone love it. So 5 years you don't need to worry about. But however, we need to look how about 5 years onwards. So basically, the 6 years, you're going to pay 1.75% of the interest rate. And then after that, each year depends on CPI, Consumer Price Index, and you're going to pay 1.75 5% plus CPI plus 2%. I know this is very confusing. We at the beginning we are very confused as well. So we're gonna show you one example.
Basically, let's break down how we came up with the percentage for the interest in year 7. So year 7, by the formula provided by the government, is 175% plus 2% of the CPI plus 2%. So let's break this down here in the example. That is basically 2%, but 2%, it's a 4%, but this you add 4% to the 175%. So you add 4% out of 175%, which is 0.7, 0.07, and then you add 0.07 to 175, so it comes up to 182. So in the same way, we continue calculating for the rest of the years.
Yeah. And here we want to point it out, actually, apart from this interest rate, every month you need to pay £1 management fee as well by direct debit.
Okay, so now let's talk about paying back your equity loan. So the minimum percentage that you can pay back is 10% of the value of the property. So the value will depend, of course, of the time of repayment. So that respectively can go up or down in value. But let's look into an example to make everything clear. So in the example here, you can see that, let's say you purchase your property in 2015 for £200,000. So your equity loan at that time was £40,000. But let's say 5 years down the line, you would like to repay in full or partly your equity loan. And then you need to get evaluation of the property. And let's say the property price rise up to 240,000, which means that at that time you own £48,000. So as the minimum payment is 10% of the property value, the minimum payment you're allowed to make is £22,000, which respectively it's 50% of your equity loan. So you can either repay 22,000 or 48,000, everything in once.
Yeah.
So many people considering jumping on the Help to Buy equity loan scheme are worrying about paying interest on the equity loan or how they will be able to repay it at all. So we would like to give you 2 ideas of what could be done. So first of all, you can remortgage, which to avoid paying interest rates, you can do that at year 5. So let's say at year 6, you would like to remortgage your property. So you go, you evaluate the property, and let's say, as shown in here in the table, your property went up in price to 250,000 from 200,000. So then your deposit automatically increased. So increased to 12,500, but now respectively as well, your equity loan increased to 50,000. So on the new property price, you're gonna need to obtain a mortgage of £187,500. So when you obtain the new mortgage, you actually gonna pay back the previous mortgage, which is 150,000, and you're gonna be left with 37,500 extra cash, which you can actually use to pay back your equity loan of 50,000. So even paying 50% of the £50,000, which is the 10% minimum repayment installment, you're still going to reduce the amount of interest that you're going to have to pay on now just £25,000. If you, of course, can top up the £37,500 up to 50,000, you can pay everything in once, which is the
ideal.
the ideal scenario. Yeah.
Okay, and another way that can pay off your equity loan is to sell your home. So if you are first-time buyer, so I assume that you are young, maybe you are a young couple, so 5 years later, you're going to change you're gonna progress in your career. You have like you can take more mortgage. Maybe you have a new family member add in, so you want a bigger home. So sell your home is also a good option to pay off your equity loan, because normally 5 years later the house price is gonna goes up. So when you sell, it's higher price than you buy, basically. So buy low, sell high. You have the differences of the money, and then you could use this money to pay off your equity loan. Finally, we have a conclusion. So we have a list of pros and cons, and Danica gonna start with the pros.
Okay, let's start with the pros on the positive side. So the first pro we listed is that the Help to Buy equity loan scheme, it really gives quick access for the first-time buyers for jumping on the property ladder. Saving 5%, it's much better than saving 10%, and as well giving opportunity for people who are struggling with savings, to jump basically quicker on the property ladder. As well, it's a great idea where you're in a situation where you're paying rent and you completely kind of wasting your money on rent,
pouring money outside.
You're not investing this money, you're not getting any return on this money. So why not just start paying a mortgage? Another pros is that basically the equity loan gives you access to free money for the first 5 years, which is a deal that you cannot get anywhere else on the market. As well, applying for 75% loan to value mortgage gives you access to a premium mortgage rates, comparing to applying to 90% loan to value mortgage, which is going to be the case with the normal residential mortgage.
So now we talk about what is the cons of this scheme. Obviously, this 20% or 40% equity loan is based on the market value. So in the future, if your house price goes up, your equity loan also goes up. So these things is not certain. So I consider it's a con. Because in most cases, 5 years later, your house price gonna goes up, which means your equity loan gonna goes up as well. Second of all is you can't rent your property unless you pay off your equity loan. So for example, you live by yourself and then now you want to move, let's say you change your job, or maybe you want to relocate it, you want to rent out your home, or maybe let's say you want to move with your boyfriend, girlfriend, but you still have to pay it, you can't rent it out. So I consider this is second of the cons of this scheme. And third of all is the interest rate also is quite confusing and unpredictable, because it's based on the CPI, the consumer purchase index rate. So for example, before we see that the average interest CPI around 2 to 3%, when we record this video, it is 2022. I believe you can realize that everything goes inflation rate very high, and now after we do a research, actually the CPI rate last April is 7%, which is very, very high. So which gonna make your interest rate also increase dramatically. That is definitely not in majority people's plan. You're gonna pay very high interest rate, and then it's just gonna, no matter what, you have to pay, you have to keep paying, even the interest rate is higher than you expect. So this is third disadvantage that I would consider. And then fourth thing, the fourth of the point is that you have to pay 10% minimum. So you cannot pay little by little and pay off this equity loan. You have to pay at least 10% of your current market home value. So it's to be honest, it's quite hard. Like 10% is not that like £2,000, £5,000. It could be like £20,000, £40,000. It's a big chunk of money. People would struggle to save this big chunk of money. So I think this is also another disadvantage of this scheme.
Also, I just wanted to explain that every time you would like to pay back, like either in full or part of your equity loan, there's a lot of costs involved with it. First of all, you need to obtain RICS approved valuation of the property, which it's going to provide the current property price on the market, and that's going to cost anywhere between 200 and 600 pounds. To handle the legal part of the repayment as well, you need to employ solicitors, which the solicitor charges, according to our research, start at 500 pounds for that service. As well, you're gonna have to pay 200 pounds administration fee to Target, which Target is the agency that's been employed to cover the transactions, to handle the transaction for Help to Buy equity loan. That agency was employed by the government. And as well, the major one of the major cons of the scheme is that the property has to be new built, and as we all know, new built properties tend to be overpriced. Okay, guys, thank you for sticking until the end of the video. If this video provides any value to you, please give us a thumbs up.
And then let us know, what do you think about this scheme? Do you think it is good, or you think it's a trap, it's help to sell? Please put your comment down to the comment section.
Yes, if you enjoy our video, please subscribe to our channel, because more videos on the financial topic and lifestyle in the UK coming up for you. You can also give us any suggestions for the topics of videos that you want to see down in the comments as well.
Thank you so much. Thank you, guys. See you next time.
Bye.
Bye.